Good morning, everyone. Welcome to today's webinar on insurance brokerage services explained. My name is Agnieszka Gaili and I'm the category manager here at YPO. I do look after corporate and financial services category. Before we get started, I just would like to go over a few items so you know how to participate in today's event. You have all joined this webinar in a listening mode. You will have the opportunity, you've got opportunity to submit text questions to me by using the question pane on the of the control panel. I will collect all the questions and send you back the Q&A document sometime this week when the recording of this webinar will be available as well. So in terms of today's session, what we're going to discuss is why do you actually need services of an insurance broker, the role of insurance broker and what to look at when appointing one, and actually how to appoint insurance broker using our insurance brokerage services framework agreement. So who's the insurance broker? The definition I'm going to use for the purpose of today's webinar is the one that you can find on the British Insurance Brokers Association website. So an insurance broker is a professional firm regulated by the Financial Conduct Authority whose prime purpose is to help customers find suitable, cost-effective insurance protection. What's really important in this definition is the reference to FCA regulation, and what it means as well to you guys is that insurance broker is going to act in the interest of you, in the interest of client. What I like to think about when defining insurance broker services is that insurance broker is actually your full-time specialist with professional skills in handling insurance business. Why the FCA regulation is important? It's because why it's important that your insurance broker is FCA regulated and FCA registered is that because FCA sets out the rules and principles of insurance providers in order to improve the experience of customers when you're procuring insurance covers or accessing services of insurance broker. There are certain principles set out by FCA, like principles of integrity, when it does say that a firm must conduct its business with integrity. There is principle with regards to management and control, when it does require an insurance companies and insurance intermediaries to take reasonable care to organize and control its affairs. There is a principle 6 which relates to customers' interest, and all the insurance organizations must pay due regards to the interests of its customers and treat them fairly. There's principle 7 around the communication with customers, that insurance intermediaries especially must ensure that they do inform them on what type of services they provide, how they are remunerated, and how they ensure that they are treating customers fairly and not misleading them by providing information. And principle 8 of FCA, it does talk about the conflict of interest and how an insurance company or insurance broker organization must manage conflict of interest, and it needs to do it in a fairly way. And when it comes to insurance brokerage, what FCA does as well, it does set out the rules and guidance governing insurance intermediaries. It is called Code of Conduct or can be known by ICOPS rules. What ICOPS does, it actually lists or explains how insurance intermediaries should conduct their business with customers who are seeking an insurance. It does addresses the potential conflict of interest that might exist when you're using insurance brokerage services, and it does address the statutory disclosure of what type of service is and what is the breadth of the research undertaken by insurance providers. So in terms of the role of insurance broker, choosing an insurance broker is an important decision for public sector organizations. Many times I have been asked the question, why do I need a broker, or came across a statement that it is a necessary evil, but to get the best value for money and give yourself a chance to get better quotes from insurance market, better covers from insurance market, you do really need to understand and appreciate that this is how the insurance market works. Majority of the insurers available for public sector organizations or broker markets only, which means they do require a broker to approach them for quotes first. So the role of the insurance broker is varied, but it does include proper disclosure of material information to insurers, the negotiation of policy price, coverage levels, wording, the provision of advice in the event of claim. And what's really important is that the insurance broker will be using its knowledge and market expertise to provide you with advice on suitable insurance protection and on your insurance program, will help you to assess your risk, will actually support you with the disclosure of the material information and make sure the disclosure you're actually doing is in line with the Insurance Act 2015. What the insurance broker can do as well is to undertake benchmarking and gap analysis of your risk profile. Insurance brokers do run, you can say that insurance brokerage organization can run about 100 tenders a year for public sector organizations. So they will have quite a good understanding of what is happening in the market, how your risk and claims profile is comparing to a similar size of organizations. So they can do that benchmarking and gap analysis for you. And what they can do as well, they can provide you with advice and a choice on the range of risk management services. Oh, sorry about that. So in terms of this slide, the role of insurance broker can be described as well as the ongoing account management support they offer. So insurance brokers do support you throughout your long-term agreements, throughout the period of your insurance covers, and during the insurance renewals and insurance tenders. They can attend your meetings with insurers. It will be something to three-party meetings when actually the insurance brokers can take some actions and try to resolve them behind this scene, including escalation points. Buying your insurance policy is a cyclical and ongoing process, and insurance brokers are working with your insurance team to engage with your organization as a whole and support you in and continuously support you in assessing your risk. What's really important to me, and what I will cover later on in terms of the service provision of an insurance broker, is that brokers do provide you with access to a wider range of insurance covers from the majority of the insurance market. This goes back to my previous comment that we do need to appreciate this is how insurance market works. Majority of the insurance providers are broker markets only. When it comes to public sector, there is only one very strong direct dealing insurer, such as Zurich Municipal, and brokers do work alongside direct dealing insurers, providing the independent advice on the covers and price available in the insurance market. So how do you choose an insurance broker? So when it comes to brokerage services, obviously you need to incur some costs to get access to that wider insurance market. But what I would advise you to do is to focus on what are you actually getting back for the money spent on the brokerage services. And should the appointment of an insurance broker be about the service quality or about the price? And should it only be a process, a step in getting more bids from insurance market? Or should you actually allow your broker to work with you and to help you engage with your organization beyond the known risk? So in terms of service quality, what I should suggest to you to look at when making decision to appointing a broker is especially the public sector knowledge and expertise, ability to service all areas of risk, ability to challenge the status quo. And your criteria will change depending on the nature of your organization, the organization's objectives, changing priorities and strategies, and the selection criteria you choose when appointing a broker. They should be agreed with your internal stakeholders, with your finance directors, IT departments as well, the board, non-executive directors, insurance teams, and procurement teams. I'm just going back to a previous slide. When it comes to quality of insurance broker, what I would advise you to look at is the ability to challenge the status quo, be innovative and really effective in designing insurance program. The ability when it comes to account management, what I would advise you to review or to look at is the appropriate structure of the insurance brokerage organizations, their ability to service your account and provide you with additional and supporting services, provide you with access and choice to risk management services. When it comes to account management, you would look at things as well. Who will look after your organization? What is the experience of the account manager, and how responsive the team is when it comes to your queries? When it comes to cost reduction strategies and achieving value for money in insurance program designs, you really want to have an insurance broker who does have ability to place niche and specialist covers, as well as the overall wider insurance program, who does have ability to test your current insurance program and see whether it is still fit for purpose or whether you're actually facing new and emerging risks. And you do need a broker who will actually be able to understand your organization and what is going on in the current public sector market, and how all the things, the different claims that are currently happening will impact on how many insurers will respond to your insurance tenders. What I really like to look at when appointing insurance broker is the market strengths of the insurance broker. Why is it really important? It's because no brokerage organization is the same. When it comes to insurance market, it is a very complex market. Brokers tend to form a strategic partnership with insurers. They create facilities arrangement with insurers, which is a great thing because they are able to provide you with a bespoke policy wording, and that's what makes them different, and that's what creates advantage over different brokerage organizations. So it's very important to look at that market strength and brokers' ability to place specialist insurance cover, to access wide range of insurance providers and create competition. It's a simple question as to whether you as my insurance broker are able to provide me with access to all available insurance providers in UK. The next one is the relationship with the insurance provider and the negotiation skills when it comes to brokerage services. What sometimes might happen when you currently got an insurance broker appointed, You might be facing mid-term adjustment to your long-term agreement with insurers, or you might have an insurer trying to break the long-term agreement and increase the prices. So when it comes to brokerage services, you do actually need a broker who does have quite a strong relationship with the market, who is very strong in terms of negotiating the midterm adjustments and the changes to the price during the long-term agreement, as well as the things like that, like you need insurance broker who will be able to support you when the break to long-term agreement happens and try to find you the best terms and conditions available in the insurance market in a very short time. When it comes to price, when you're assessing insurance brokerage services, price might be established as one of the following. It could be established as a fee per project, per annum, per hour, per class of cover required. It might be established as a commission-based earnings, or a gain share or performance-based earnings. What I would like you all to do is, when appointing insurance broker, and what to be careful of, is the abnormally low prices. When the trouble with insurance brokerage services is that it is a profession who is not recognized in the market in a similar way that accountants or solicitors are recognized. And if insurance brokerage was recognized this way, you would expect charges for insurance brokerage fees to be in the value of £100 per hour, or even £200 per hour, and you would be facing annual fees of £200,000 rather than what you're paying currently, when on average it is between £15,000 to £30,000. So when you're appointing an insurance broker, you do actually need to look at the abnormally low prices, and whether the insurance broker who offers you £2,000 for an annual service during your tender year is not trying to recover its costs in a different way. And what we know when it comes to insurance brokers organization is that they are remunerated by insurance providers. The standard market average remuneration is the insurance services brokerage, which is normally at 3.5%. And it's on top of your policy cover, but it is included in the insurer costs. And in terms of remuneration received by brokers, what happens when insurance broker is placing your insurance requirements on your behalf, and when the successful insurer is the broker only insurer, the insurer broker does exchange the policy documentation. They do check the policy documentation for the correctness of the wording, just to make sure whatever was proposed in your insurance procurement tender in terms of policy clauses, it's actually included in the policy documentation. They do make sure that your money are held and protected in their accounts and passed to insurer. They do ensure that you guys do pay insurance premium tax. So there is varied reasons why insurance brokers do receive remuneration. But when it comes to issues with transparency and use of an insurance broker, the transparency in the procurement of insurance is especially important due to the complex nature of the insurance market, the strategic relationships formed between insurance brokers and insurers, and the potential to have a conflict of interest. And with this in mind, contracting authorities, the public sector authorities should take into consideration Regulation 18 of Public Contract Regulation, which does talk about the principles of procurement, which are transparency, equal treatment, and non-discrimination. And it does pushes public sector organization to put appropriate measures to prevent, identify, and remedy conflict of interest arising in the conduct of procurement procedures. And it does require public sector organization. Well, it does not allow public sector organization to narrow the competition by designing tenders or selecting providers in a way that it could unduly disadvantage certain providers. So when it comes to abnormally low prices and additional remuneration received by insurance brokers, it does require your attention just to make sure that in the next steps of your insurance program, insurance procurement process, you will not have to deal with a conflict of interest and issues around transparency. What I would as well say that it is not best practice to drive the cost of insurance brokerage services down, but the best practice is to actually properly assess the service quality of the insurance broker and challenge brokers to achieving maximum value for money for you in insurance program design, including the breadth of cover, limits, deductibles, and reductions in premium. And this is going back to my first comment, whether appointing an insurance broker is about the quality or is it about the price? Should it only be about the process, a step to get access to a wider insurance market? No, it shouldn't. Customers who put more emphasis on price and regularly test the broker to drive down fees with incumbent provider as well might find that the amount of interest in the business actually is slowing down and it wanes over time. And what I would like you to remember is that broker is your gateway to the insurance market, and choosing a broker with the right skill, knowledge, and market relationship is vital to the successes of your insurance procurement strategy. So how could you appoint an insurance broker through our insurance services framework agreement? Some of you might already know YPO has established together with our partners ESPO and NIPO 2 contractual arrangements. One is for insurance broker services, the second for insurance placement, and it's a dynamic purchasing system set up only for insurance companies. When it comes to insurance brokerage framework agreement, it has been live since July this year, and it's going to be live for the full 4 years, where you do have ability to enter into a call-off contract or renew your insurance brokerage contract for more than 4 years. What we have done on the framework agreement has been set up following the public procurement regulation procedures, and following the tender process, 8 providers has been appointed onto our framework agreement. It's people like, it's organizations such as Aon, Gallagher's, Brian Johnson, Griffith & Arbor, GMG Risk, Marsh, including JLT Specialty, Towergate, and Willis Tower Watson. As a public sector organization, what you need to remember is that brokerage organizations vary in terms of their size and service offering. We are dealing here with large global brokerage organizations such as Aon, Gallagher's, Marsh, Willis Tower Watson, and smaller niche providers such as Brian Johnson, who is specializing in motor insurance coverage for NHS trusts, as well as GMG Risk. It's a small medium enterprise specializing in motor insurance. And when it comes to insurance market, at the moment it can be characterized by mergers and acquisitions. So the market has changed in the last 2-3 years. Aon has started with acquisition of Henderson Insurance Brokers, a specialist insurer in the university sector. R2J Gallagher, followed by acquisition of Portmore Insurance Brokers, and just recent acquisition of Stackhouse Poland. And just recently as well, it has been announced at the end of last year, and it started this year. It's a massive acquisition of JLT by Marsh. So when it comes to insurance brokerage services, the access to providers is actually changing. We are dealing with a smaller number of brokerage organizations. The good news for you guys is that they are getting stronger when it comes to their market strengths and market relationships. They can, through the acquisitions and mergers, they can offer access to more insurance providers, to more facilities arrangements, to more bespoke awarding and offering, which obviously for a public sector organization whose aim is to achieve value for money is actually a good thing to hear. So you've got two options to appoint insurance broker through our framework agreement. One is direct award, and second is quota competition. Direct award. So when would you use a direct award? It's obviously subject to your standing orders, the standing orders of your organization, and this is where I would ask any public sector organization to start. We are a public sector organization, and we do have a duty to comply with Public Contracts Regulations 2015 and its principles, and the rules do set out threshold on when you should undertake a transparent and open tender exercise, and in what circumstances you can use your organization's standing orders, or you might call it contract procedure rules. Just as an example, a standard local authority will have 3 different levels of standing orders. If the spend per annum is above £30,000, then they will require you to run a quota competition. If the annual spend is below £30,000 or up to £25,000, they might require you to source 3 quotes. So whether you choose a direct award, it is what I would ask you to do. If you're an insurance manager, I would advise you to speak with your procurement teams and get advice on what actually you can do when renewing your insurance brokerage contract. The second thing to consider is your current situation. So nowadays, all public sector organizations are going through massive changes, and the criteria to appoint insurance broker will change as well, depending on the nature of your organization, the strategy, your insurance procurement strategy, the emerging risks you are facing, or just simple things like when it comes to your current insurance program, your insurers might be breaking your long-term agreements because of the changes to legislation, something we have seen when government introduced changes to the personal injury discount rate. You might have increasing claims for liability. You might be facing pressures to generate savings. You might be facing new risks such as cyber risk, or your organization might be setting up limited companies to get more income for your local authority organization. It might be that you actually reviewing your last insurance procurement tender when you have only received one quote from an insurance market, or it might be things like your team might be changing, your insurance managers might be leaving, or your team members might be a long-term sick. So all those factors need to be assessed and considered when using direct award or through the competition, as it will depend. If you've got time to reassess and benchmark insurance providers, then it is more likely that you will use for the competition. But if you don't, because you're going through all those different changes and you've got all those different issues to deal with, then direct award would be a suitable route to market for you. The last thing to consider when using direct award is the current service level agreement you've got in place, the performance with your incumbent insurance broker, whether you're happy with their performance, or whether your insurance broker is constantly underperforming. I would put a caveat here as well. Sometimes, from experience, I know that when it comes to insurance brokerage contract, there might not be the right level of service level agreement set up, and in that situations, even if you're not happy with the services of your insurance broker, and if you don't have the right SLA set up, you actually don't have an opportunity to remedy any underperformance or any issues. So it is really important to actually review your service level agreement and what else you're actually expecting from your insurance broker, and how you could actually set up and put in place new SLA. When it comes to relationship, just to highlight to you, when it comes to insurance market, it is all about relationship. It is all about the personal approach and knowing the person, trusting your insurance broker. So what normally would happen, an organization will verify the current relationship with an insurance broker and how well they are working with the insurance teams, how well they are supporting the organization when it comes to large claims, large losses, how well they work during insurance renewal process. So when it comes to direct award and a framework agreement, every good framework will provide a direct award will provide a quick and easy access to services of a provider, in our case, insurance broker specialist. It does save you time and resources. The due diligence is completed. You do have established terms and conditions. You do have established pricing, and it does give you a quick access to associated support services. So what I would like to highlight to you when it comes to our specification for insurance services, our specification for the services of insurance broker is actually, we went to it is a quite detailed specification when it comes to minimum standards, minimum service level agreements, how the broker should behave when it comes to insurance program design, what protocols they need to follow when it comes to insurance placement. So I'm just going to give you a couple of examples. So our insurance brokerage framework specification does cover the design or assistance with the design of insurance program, the procurement or assistance in the procurement of the required insurance covers and the completion of the insurance placement. And it does cover the provision of consultancy on a wide range of associated services. When it comes to a minimum service level agreement, we did set up some SLAs. It does follow the customer pre-engagement we undertaken when establishing this framework agreement. We do asking insurance brokers to set up frequently review meetings with you as their customer. We do ask them to respond to queries about policy cover and amendments within 1 working day of receipt of the comments. We do ask them to acknowledge or instruct insurers of a new or amended covers within 1 working day as well. We're asking insurance brokers to provide annual renewal reports, a minimum of 120 days prior to renewal. This is to make sure you've got enough time to consider the renewal proposition and consider the potentially consider the price increases as well, or even consider whether to accept it or whether to go out to an insurance tender again. When it comes to assistance during a procurement of insurance, we did make sure that insurance brokerage organizations appointed on our framework will follow the public procurement regulations and principles of non-discrimination, equal treatment, transparency. We do set out rules on how the transparency and fair evaluation of the insurance proposals must be undertaken. We do set out rules on what type of assistance insurance brokers must provide you during insurance tenders. So it's things like providing assistance during clarification period, assessing, evaluating and clarifying insurance submissions you will receive, providing you simple things like providing you with a recommendation report no later than 2 days prior to recommendation moderation meeting. And when it comes to final things, even like setting up or drafting award and rejection letters, when you actually do need to go now into more details explaining your decision to insurers and actually disclosing the characteristics of the most economically advantageous tender, we do ask insurers and brokers to provide you assistance in drafting those award and rejections letters, as they are on many occasions, insurance brokers are the people who will be evaluating insurance tenders, insurance proposals, and they will be best placed in terms of highlighting the characteristics of the winning insurance providers. When it comes to a standard account management services, we do ask insurance brokers to police and provide timely recommendations and support prior to your renewal process. Like I did mention, the reports needs to be provided to you guys 120 days before the renewal. They might be asked to attend the pre-renewal meetings with insurers. They must support you when it comes to information disclosure and to ensure it is in line with Insurance Act obligations and duties you have got. And when it comes to account management as well, we did look at the potential conflict of interest and disclosure of the all remuneration, and it just needs to happen before or during your annual renewal process. Just a little bit about conflict of interest, as it is important to assess it on a quality side when you appoint an insurance broker. So what we have done in our specification, we did ensure we actually did verify providers on how they manage conflict of interest, how they identify one, and how they mitigate any conflict of interest. And conflict of interest, there are many types of conflict of interest. It could be business related, it could be financial, it could be personal. Sorry, my voice is disappearing. However, what you as a public sector organization needs to ensure is that the insurance provider you're appointing does have a robust and up-to-date governance and control framework when it comes to managing conflict of interest. We did ask providers to especially review the situation when the insurance broker operates several divisions. So, for example, when it's acting as an agent to the client, as an agent to you, and is acting as an agent to insurer. This happens especially in a situation with managing general agents. So we do have some managing general agents in the public sector market who are owned by insurance brokerage organizations. So when setting up this framework agreement, we did actually ensure that management of the potential conflict of interest is happening, and we did verify things, whether each division operates separately from each other, where they've got separate systems, separate processes, separate reporting lines, even separate buildings, just to make sure the conflict is managed. And you guys can be protected in the next stages of the insurance procurement process. When it comes to direct award through the YPO insurance brokerage framework agreement as well, what is really important is the terms and conditions covering the agreement. What we have done when setting up a framework agreement is having a pre-engagement session with all insurance brokerage organizations interested to bid onto our and be appointed onto our framework agreement. And when we discussed terms and conditions, we actually discovered that majority of the times the terms and conditions proposed to insurance brokers by public sector organizations do not actually fit with the market and how it works and what type of duties insurance brokers do have under FCA regulations. So following all those conversations, we actually set up the terms and conditions that do cover FCA regulations and insurance brokers' duty of disclosures. We did ensure that Insurance Act requirements are incorporated in those terms and conditions, as well as TOBA. TOBA stands for Terms of Business Arrangements. At the beginning of this webinar, I did mention to you the requirements under FCA regulations. So what the FCA does ask insurance brokers to do is to actually disclose the information to customers around what type of services they do, how they are remunerated, how they hold clients' money, or what type of fair analysis they are undertaking when sourcing insurance products. So what insurance brokerage companies tend to do is disclose that information in the form of TOBA, Terms of Business Agreement. It is not compulsory for them to do it, but it's the standard accepted way of doing things. And sometimes when your organization is trying to renew the contract with insurance broker, and when it's setting up the terms and conditions, it's actually forgetting about the disclosure requirements insurance brokers do have. So when we set up terms and conditions under our framework agreement, we actually take it into consideration and write the terms and conditions in a way to allow brokers to disclose those terms and conditions without actually getting into conflict with your compliance teams or legal teams. And the last advantage of the last benefit of the direct award is the established pricing. It's very flexible. What we have done on the framework level, we establish price per annum for core services and associated services. what it does allow you to do is it does allow you to specify your requirement, whether it's a tender year, insurance tender year, or just a simple account management year. It does allow you to specify your requirement, does allow you to choose associated services, and what it allows an insurance broker to do is properly calculate your annual fee. Because what you need to remember is that every organization, whether you are a local authority, whether you're a school or housing universities, your requirement will be different, and brokers need to have that flexibility to assess your requirement properly, to look at your risk, to look at your claims history and calculate how much time it will take them to actually provide you with a high quality service. When it comes to for the competition to appoint an insurance broker, similar rules that apply to direct award. It's obviously subject to your standing orders and whether you can do direct award or whether you must do for the competition. It's subject to your current situation and current service level agreements, whether you do have insurance broker in place at the moment, or whether it's the first time you're actually appointing an insurance broker. And when it comes to our framework agreement, what does it give you? It gives you facility to test the market and benchmark providers. Bear in mind, we've got 8 insurance brokers appointed under our framework agreement. Not all of 8 insurance brokers will be interested in every organization. I did mention to you that some of the brokerage organizations are only specializing in a certain type of risk, such as motor insurance, and for certain type of public sector organization, where you do have facility to what the further competition does. It does provide you with facility to redesign the quality of the service you currently got in place, review your service level agreements, and when it comes to the criteria, quality and price, well, I did put a lot of emphasis at the beginning of this webinar on price and how important it is to properly assess your insurance broker rather than trying to get the prices down of the services that brokers provide, but the choice is totally up to you, and you can reopen criteria for quality between 30 and 90% and price between 10 and 70%. So in terms of summary and my final comments, when appointing a broker, what I would advise you to do is actually give yourself a time to properly assess the market strengths of insurance broker, and to, once you appoint your broker, to actually give yourself and your broker a chance to properly review your insurance requirements. When it comes to insurance broker appointments, that they should happen at least 6 months before your insurance renewal or insurance tender, just to give you that time for the time you can spend with your insurance broker, so they can properly assess your organization priorities, your organization's risks, and look at your claims and what you're facing, and actually discuss and decide on the insurance procurement strategy and how you can approach insurance market, how you could pre-engage with insurance market as well to get as many insurers as possible bidding for your risk. So thank you so much for today. Thank you for joining me for this webinar. If you've got any questions, you can contact myself, or you can contact my team at insurance@ypr.co.uk. I would strongly advise you to connect with us on LinkedIn, as we will be sharing, we are already sharing a lot of information on the brokerage services and insurance market. You will get access to blog articles as well, and the up-to-date information when it comes to insurance market as well. So thank you for today, and have a great day.